Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to take a look at some quarterly earnings. That includes Aurora. They just had to take over a $3 billion write-down, which is crazy. Also, Planet 13 is facing a challenging environment. In Med Pharmaceuticals, they posted a record net loss of almost $12 million. Not as bad as $3 billion, but it's a lot of money. This is the second year in a row for the Vancouver-based company. Last year, they posted a $13 million loss. Looks like they've increased their research and development expenses, but lowered their general and administrative expenses, and yet they still want to file an IPO and go public. There's a lot of speculation in the marketplace right now. People don't care about fundamentals or technicals. It doesn't matter if they're profitable or not. People are just gambling at the market. I can't believe anyone would invest, quote, invest in Aurora, knowing they have been writing off $1 billion and now $3 billion. The money you're giving these guys, they do not care about it. They're literally just wasting it, throwing it away, and burning it. They don't care. And so I would never put any money into a company like this. That is absolutely insane. The valuations are crazy. But again, nobody cares about technicals. Nobody cares about the fundamentals. This is all speculation and gambling. But the CEO isn't worried about it. A strengthened line of vape pens and pre-rolls and increased focus on premium, better flower should address these issues. I bet you that guy's never used cannabis. I bet you has no idea what the culture is. I bet you has no idea what he's doing. All right, so the CEO of Aurora, Miguel Martin, he came from Altria, so definitely doesn't know anything about cannabis. He just knows how to sell, or thinks he knows how to sell products. Came from Altria, then he worked for a technology company, then CBD company, and now all of a sudden he is an expert in cannabis. Obviously not having to write off $3 billion. I would imagine that guy's job is about expired. It's not just LPs. Multi-state operators are finding it difficult in this environment right now. So Planet 13's year-over-year revenue dropped 35%, totaling about almost 11 million. So the Las Vegas-based company, they disclosed an adjusted EBITDA loss of $700,000 for the quarter ending June 30th versus an anticipated earnings of 2.7 million. I mean, that's a difference of $2 million. Come on. It also posted a net loss of $4 million in the quarter compared to a net loss of $900,000 in the same period last year. 2020's cannabis trends are projecting and playing out as expected for a lot of parts in the cannabis industry despite this pandemic. Sales of cannabis-related products keep setting records in multiple states. In Colorado, for example, sales are at an all-time high. Sales of cannabis products in Illinois are unprecedented. In Oklahoma, the same, Pennsylvania too, and Oregon as well. Even in California, many folks are predicting a meltdown due to many issues. Cannabis sales are setting records there. So you get the point. There's also adult use markets in general. It's up 1 in 4 adults use cannabis in the last year, and perceptions of the cannabis industry are trending positive. So when there's a customer demand and positive trends, there's an opportunity through the entire supply chain, both plant touching and ancillary. Current climate is stirring up some mergers and acquisitions as companies are trying to look for maybe new opportunities on the East Coast of the U.S., or maybe some distressed assets on the West side, as well as up in Canada. There's some struggling companies up there as well. So in terms of the mergers and acquisition activity, it's rebounding. Deal sizes are also getting larger. So note that the recent acquisitions of Vireo Health International's cultivation and processing operations in Pennsylvania by multi-state operator Jushi Holdings for $37 million. And there's other many examples as well. And the predicted trends on M&A front are very positive, and we'll definitely cover a lot more of this next week. Raising capital has been incredibly difficult during this time, and so venture capital deals are also on the rise. That's great news. So a recent notable transaction was the closing of an $11.5 million Series B financing of Spring Big. It's a leading provider in cannabis CRM and loyalty marketing technology. Included an investment by one of the closest strategic investment partners and a client of Hoban, called Key Investment Partners. So the round was led by TVC Capital, software-focused group, an equity fund, and other investors included Agronaut Ventures, Halley Venture Partners, and Salix Capital. So it looks like venture capitalists are playing in this space and deploying capital, and it's clear that investors are focused both on tech, distribution, and brands, in addition to plant-touching opportunities. In terms of cannabis investments, it's remarkable about the rise in new investment funds being formed in the space. Some funds are being created for social equity initiatives, others are focusing on traditional debt and other venture-style equity investments, and some funds are raising money as well, which only means that more capital can be deployed into the industry. So despite the new normal that we're all adjusting to, the future remains bright for the cannabis industry. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.